Good afternoon, everyone. Can you all hear me okay? Excellent. As Gavin said, my name's Neil Bradford. I'm the CEO of Argus Media. Argus is a publishing and data company. We provide daily news and prices, and we're probably best known as the joint publishers of the API indexes. So we publish API 2, API 4, API 6, API 8 for China, API 10, and API 12. So that's who Argus is. My role here today is to moderate our Oxford-style debate. And let me spend just a couple of moments talking about what an Oxford-style debate is. As you can see, we've rearranged the rooms. And the idea of this debate is, rather than a presentation, we have a full and frank exchange of views and ideas by asking a sharply framed by having a sharply framed motion, which is proposed by one side and opposed by the other. So this afternoon's sharply framed motion is that this House, and we are a House, so I'll come to that in a second, believes that the markets will need an infrastructure-heavy greenfield thermal coal project in the future. This House believes that the market will need an infrastructure-heavy greenfield thermal coal project again in the future. This style of debating came from Oxford. The Oxford Union was founded in 1823. So if for a moment you can imagine, rather than being here in beautiful Barcelona, you're in a rainy evening in Oxford. We're in an oak-panelled room. You've all enjoyed a very rich dinner. I'm standing here in white tie and tails. My two learned colleagues are also there in the middle in white tie and tails. We've had some nice port, and we're ready for the debate to begin. And on this, both sides, they will take positions, they will argue. And as our optimist-in-chief, proposing this motion that we do require, again, infrastructure-heavy greenfield projects, is Johnny Saltoun, who's Research Director of Global Coal Markets at Wood Mackenzie. He will propose the motion. So everyone on this side, you are on the proposer's side. You're behind Johnny right now. His job is to keep you and have your support. And over here, the pessimist side, ladies and gentlemen, you are behind Colin Hamilton, who is the head of commodities research at Macquarie Group. Colin's quite a miserable man, and his job is to be the pessimist here, which is to say, no, he does not believe we will ever again require a greenfield project of this kind. And again, I stress they are taking positions in order to create debate. Now, we've had to brief them both. These are two of the finest debaters in our industry. We've had to remind them that there'll be no swearing and there'll be no personal attacks. We've had to separate them in the hall so they cannot physically get to each other. Hopefully there will be a good and strong debate. And what I'll ask them to do is I'll ask them to give 5 minutes of opening remarks. They'll both do that. They will then be able to answer each other, ask some questions on that. We will ask for questions from the audience, but also if you wish to make a point, you can make a point supporting one of these two fine gentlemen rather than simply ask a question if you want to propose or support the motion or oppose it. And then we will round off and have some voting at the end. And I would just stress you can either raise your hands when we get to questions, or I have got the iPad here, so in terms of emailing questions, feel free to do that. So with no further ado, please join me in welcoming our proposer for the afternoon, Johnny Saltoun.
Thanks, Neil. Okay, thanks very much, Neil. Good afternoon, Colin, and everyone else. Look forward to this, Colin. We've been preparing for, I don't know, 6 months. So, why have we, what's our case behind the development of a greenfield infrastructure-heavy thermal coal project? Well, we at Wood Mackenzie, we are one of the leading commercial research firms all across the energy value chain. On coal specifically, we think we have universal coverage. We cover 1,400 assets that are producing and non-producing, looking at coal quality types, coal costs, coal volumes, and out of those, there's around 400 that we've looked at specifically on the greenfield side. So we feel we've got a good handle over that. On the demand side, we look at every coal-consuming country in the world, forecasting demand, price, supply sensitivities based on interfuel competition, which we bring in from our power and gas group. So, we feel we have a pretty good handle over this. When putting this together, we thought, well, let's scour our databases and try and find what really fits the question. What is a greenfield project? What is an infrastructure-heavy project that is greenfield? And we looked at a number of different basins around the world for thermal coal, ignoring some of these over-elaborate ones, perhaps Madagascar, Botswana, Santander province in deep Colombia that might take $120 per ton to bring to market. And we came up with these proposal basins, 2 in Australia, 2 in Indonesia. The Galilee and the Surat, everyone probably knows quite a lot about. Galilee and Adani's Carmichael project has been in the news a lot over the last 3 months, but again received federal approval a couple of days ago. We'll see how that goes. Central Kalimantan in South Sumatra in Indonesia that require a railroad. Remember, a railroad's never been built in Indonesia successfully before. The Waterberg and Witbank projects in northern South Africa, which, regardless of whether they serve the domestic market or the export market, they are going to be needed, in our view, due to the dwindling reserves that Eskom has tied to their power plants. And then also, we wanted to include Indian domestic greenfield projects, Chinese domestic greenfield projects, because in reality, these are going to be pretty heavy projects with an infrastructure component, be it coal by wire and beyond in Xinjiang in China, or the dedicated freight corridors in India, either east-north, west-north, and east-south to serve both domestic plants and then possibly down to the coast. And the number one reason why we feel this is going to be a really important point or a supportive point to the debate is that greenfield project costs, our estimates, taking into account a lot of costs that have fallen over the last 12 to 18 months, are actually lower than what a number of people project. You're not talking about these incentive prices of $100 anymore. Coal costs have fallen dramatically across the board, especially in nations that aren't denominated in the US dollar. The oil price, lower for longer, is going to feed into a lot of diesel savings. The actual production utilization and equipment sharing that there's been all across the Australian value chain. So my number one reason is there's a lot of volume from greenfield projects. The costs aren't as bad as some people kind of make out. And let's look at the demand side. So if you turn towards world energy demand, and we can look at this in different ways, either on a MTOE basis, which is kind of a common approach with the IEA, for instance, we still feel that there is development to go on coal. It hasn't peaked in our estimation. Coal is still a growing part of the power generation sector. Yes, it's taking quite a lot of hit at the moment from low-cost renewables, particularly in Europe, in North America, and there are some rapid renewables targets in China and in Japan and in India. But we still feel that coal is going to be a part of the energy mix, overtaking oil by 2025. And then when you look at, in the markets that really matter, the 3 big thermal importers in the world, China, India, and Japan, we do see that coal-fired percentage of generation fall over time. Absolutely, we've seen this rapid approach, dedicated approach to 100 gigawatts of renewables in India by 2022. That still looks high. You look at some of the solar and wind targets in the China 12th year plan, which we allow for. But then there is a big question around baseload capacity from nuclear. We can come to this, build this up a little bit in the big larger session. But nuclear power in China, from what we've seen, is required to the order of 175, 200 gigawatts. In the 13th year plan that'll be proposed in the next couple of months, we've seen some headline comments of a need for 58 gigawatts of nuclear capacity by 2030. That looks low. The real need to displace a lot of coal-fired generation in the mix. And of course, nuclear being 98% load factor, that's a lot of terawatt hours to be displaced. So then when we look at the development of the thermal coal market, be it domestic or seaborne, and on the right-hand side we can see the seaborne market, we do absolutely see this structural overcapacity that's been in place for at least 2 years. We do see that beginning to wind down. A lot of illegal mining in Indonesia will come off, but certainly our projection is that by the time you get to the late part of this decade and into next decade, you're talking about brownfield expansion and then possible greenfield expansion beyond that. And those are our proposal cases. Over to Colin.
You stand up, Johnny, I'll stand up. Thank you, Johnny. As I said before, only one of us has been to Oxford, and it's not me, so I'm at a natural disadvantage here. In these markets, I cover a lot of commodities, and I would gladly say that thermal coal is probably the worst of them. Not only does it have a stubborn supply side, but it's a situation where demand really isn't growing in our view. And that's a big difference. So we agree it loses market share, but it's losing market share in a new world where we've got the wrong type of economic growth. Effectively, the infrastructure investment-heavy growth we've seen in all emerging markets over the past few years is now dwindling. Power consumption, as a elasticity-affected GDP, will be lower. And in this market, it has the unique factor of Chinese protectionism. What I mean by that, let me flick on a bit here. Lots of slides to reference. So, Chinese thermal coal imports, if we look at that left-hand chart, way down. Yep. And that happened last year, and effectively, why did that happen? The Chinese government, there we are. The Chinese government is now looking after its own. Corporate debt structure is too high, and like everyone else, they're saying, well, how do I keep these companies going? I have to restrict imports. And that's being done by, as you know, quality checks and various other things. I cannot see that turning around. So your world's biggest importer is now losing market share rapidly and is not going to be an importer anymore. We're relying, therefore, heavily on supply cuts from Indonesia. Of course, this Indonesian supply has been encouraged into the market by high pricing, but being encouraged in is easy. What we're seeing, we're in a world where money is cheap, refinancing is easy. You get very stubborn supply side. So we're struggling to see that tonnage come out. We have seen decent Indonesian export decline this year. We're going to need to see an awful lot more over the coming years. In a cost curve, I mean, GM talked about it in his presentation, where it's falling rapidly. You can see there where we think that cost curve has moved down over the past few years. I just want to make a couple of points. So if we look at why China's worried about corporate debt, their coal miners there have huge liabilities. Now, there's either a choice here. Do you let it be a risk in the financial system, or they look after them? That's why there will be a higher Chinese domestic price than imported price in the coming years in order to maintain that arbitrage and in order to look after those domestic coal miners. I agree with fully. Xinjiang is going to develop. Coal-by-wire is coming through. China's reverse engineering its economy. It's moving its heavy industry back towards a resource base. But that resource base, where there will be coal-fired generation, the eastern seaboard, therefore, will get its power from elsewhere. That's your contestable coal market. Your contestable coal market is therefore in decline. And to me, that does two things. Number one, it helps the growth in Western China. Secondly, it moves threat of pollution away from the eastern seaboard. So coal-fired generation, we've already seen it in Jiangsu, down 40% roughly this year. Just to talk briefly on India, before we come to an end. Every coal producer, all your side of the room there, are pinning their hopes in India. And India's done well so far. We've seen this rapid growth. India will now be the world's largest coal importer. But a couple of things there. A lot of it depends on, number one, domestic production. Now, Coal India, as you know, have been the world's largest over-promiser and under-deliverer for years. But yet this year they're growing, and they're growing at about 10%. Now, they're not going to meet their targets. But let's say they grow at 5 to 7% production over the coming years. India doesn't need to import any more coal. So that growth market to offset Chinese decline disappears. And then you move into, as you rightly said, the renewable side of the equation. Coal India is ambitious, but we think it may happen. And some of the key bottlenecks are out of the way. But I want to talk about this, the threat of renewables. You mentioned it. It's huge. Every utility analyst in the world is talking about us going back to the 19th century. And by that I mean get away with big national grids, except for the instance of China from Xinjiang, and focus on local generation and local distribution based on renewables. That means we don't need these big 4-gigawatt coal plants anymore. And if there's one country in the world where this is set up, it's the most litigious country in the world for land rights. It's India. That is perfectly suited to a local generation and distribution network. So for me, when you take into account all the confluence of these factors, I just don't see a need for another big coal project in the coming years. I accept, to your point, that the costs are coming down. costs can come down all they want. When you have an oversupplied market where people are not taking enough supply offline, there'll be no financing out there. Thank you.
Yeah. Okay, so now it's when it gets exciting. Johnny, so got some points there. Colin, are you really saying that you think that coal output has peaked already and will never increase from this point? Is that the Macquarie view?
I think if we didn't hit peak in 2014, we're pretty close. The growth projections that we have for energy as a world are probably too high, and coal is now on the shoulder, if you want. Renewables are going to come through. They're going to be constant. Nuclear, we can see that build-out come through. Coal is falling out of favour in Europe. Coal may not grow in India as much as is expected. Coal in China has probably peaked.
Maybe, Johnny, you could expand on your view on peak coal, as it were, and maybe also touch on the China situation as you see it.
Sure. I mean, there's a couple of points I want to pick up on China. So let's start with protectionism and ultra-low emissions. Okay, so over the last 12 to 18 months, there has been 12 or 13 different evolving policies or edicts. Some environmental policy, but really a lot of them masquerading as environmental policy, but they're really domestic protectionism. Imports have fallen, no doubt about it. I mean, it'll be 145 this year, 33% loss in thermal coal imports into China. That's this year, okay? That doesn't equate to lifetime in our view. And the reason why, we've seen, on air pollutants, let's, forget about CO2 for a minute. Air pollutants are absolutely a crucial part of the Chinese part of the environmental legislation or movement towards that. The rate at which ultra-low emissions technology is trying to be rolled out across coastal provinces is really quite quick. Remember, when APCAP was proposed back in 2013, it was quick, rapid coal-to-gas switching. Let's deal with that. The reality was there wasn't a huge amount of gas available, and it was, okay, we have coal, let's use it as cleanly as possible. So ultra-low emissions, and we've done this analysis, we've looked at all the plants that are being proposed, the rate at which they're being proposed, and the quality that is meant to be achievable for these ultra-low emission standards, which is better than gas-fired CCGT. What you're looking at, for the 8 gigawatts that's proven, pilot tested by Shenhua, who've got access to good low-quality coal, they're about achievable with domestic coal. The targets are 150 gigawatts by 2020, and they're rapidly kind of moving in that direction. Our feel is that when you look at that rapid amount of growth in coal-fired, clean coal, not in the CCS clean coal, but in the air pollutant clean coal sense of the world, it's going to be very hard to get there with domestic coal only. So yes, we agree, peak coastal coal demand probably happened in 2013, and we're on a downward trajectory. But the percentage of imports we feel is still going to be needed from, now what are we at, 15% to a tolerable level, maybe 30% maximum. And that will give a little bit of long-term growth for coal imports. So then you turn it around and say, well, hang on a sec, what about all the domestic protectionism? Well, 2 weeks ago, Heilongjiang, Longmei laid off 100,000 people. The whole SOE enterprise reform, I think there are some questions now being asked about, look, we have a 5 million workforce, 80 or 70% of it is underwater. I think there are starting to be some decisions or some cracks in the wall whereby domestic protectionism may not be so palatable anymore. And so when you put those two things together, we feel that there is, on a quality basis into China, there isn't enough domestic coal to go around. How much is being washed at the moment? Maybe 20 to 30%. Now there's a premium on water for the washeries, and cost for imports is still very competitive. So we feel that there's a tolerable level of imports into the contestable market that still implies that there could be a share that imports will grow into. We don't feel Chinese coal imports have peaked. We feel absolutely there's a malaise this year and into next year, but there's still some potential growth. And that, with other growth elsewhere, which we can talk about, will help to develop either domestic greenfield within China and India or international greenfield in other countries.
Can I'll take a couple of points there. Quality of coal in China. You said it yourself, they're moving north and west. So you go up to Xinjiang, you have 6,000 kcal coal, 4% ash, straight at the ground, straight into power plant, straight into the wires. Yeah. You have, as you said, 800 million tons. That's huge. Mm-hmm. I mean, that's a seaborne market. Yeah. It's being developed in northwest China. So with that, China can look after itself with its own quality coal. You also have high-quality coal in Shanxi with the AA that they're starting to see come to market. So for us, it's an entire shift of the industry. The other thing I would say on the protectionism, never underestimate the financial sector. The reason these coal companies are still going are because the banks have loans out to them. Now, the only way you, as I said before, these coal companies in China are totally unviable, but they have debt. Now, either you say, put your hand up and say, Jings, I've got too much debt here, bank manager, I've got too much loans out to this company, I'm going to pull it. Or in a command economy where, and China's a very interesting economy at the moment. You've got strong growth in the service sector, we saw that in the GDP today. You've got the resource the 6 provinces in northern China, which are struggling, and the labour market's weakening. Under that environment, the government will, in the short term, keep on supporting that domestic industry. Again, I see some imports of coal into China. It's not a level that means we need to see on any sort of decent time horizon growth in the seaborne market.
So your perspective is that domestic coal in China is too big to fail, effectively, and it will be bailed out tooth and nail?
Essentially. And it's going to take a lot of reform, which is unpalatable at a time of lower growth. China's an economy in transition. You're losing people already, Johnny. I can see them walking out.
Well, you're the one who's talking.
It's an economy in transition, and during that transition phase, what are we seeing? China's reverting to old in the short term. This is kicking the can down the road. It's not sustainable in the longer term. But at the moment, for the next 5-year plan coming out, there will still be coal in there. It will be inland coal, but the push on renewables and the push on nuclear, smaller scale nuclear, and will be huge.
How do you see then nuclear build getting to these 175, 200 gigawatt targets? Take the nuclear industry as outside of China. For an industry that should be about to explode with growth, it's very dormant. EDF, the new nuclear in the UK, of course in Japan and South Korea. There's just no notion of this explosion of growth in the nuclear industry, and I use the word explosion lightly there. Our perspective is, yes, it is meaningful there are some construction plants, but how do you replace potentially 100 gigawatts in terms of terawatt hours of energy in China or electricity demand in China?
Two things. Is your China electricity demand forecast right in the first place, or is it too high? Bear in mind we're having electricity consumption flat to down now, still with 6.9% GDP growth. But secondly, in terms of the nuclear side, what you are seeing China trying to do is build the smaller scale nuclear reactors. They have a water problem, as you mentioned.
Yes.
So you'll see much more like 1 gigawatt mini module reactors come in on the rivers. I think that the targets you talk about are unobtainable, but I still think nuclear will grow. It will grow market share in a Chinese power environment that really isn't growing anymore. Therefore you lose coal.
Well, agree to disagree, because we have got an electricity demand growth that isn't outrageously high. It's tied to a much lower rate of elasticity. It accounts for by the end of 2035, and I know Macquarie only go out 2 or 3 years because that's the kind of life cycle of your business, but when we're looking a little bit further out, power intensity, power per GDP, power per capita, you're still at a rate which is very poor in our estimates, on a par with modern day, or even less so, energy efficient Germany or Japan, not very wasteful countries for power consumption per head. In India, it's far worse. India, you could say most third-party reviews of electricity generation is actually very low if you look at that. So in theory, you could have even more contribution from all fuels.
It's interesting.
Before we carry on, just the gloves are off now, which is very good to see. So can I just ask, before we go on to India, so just in terms of the room, quick raise of hands who agrees with Johnny in terms of there is still growth in global coal production. Hands up if you believe there's still growth in global coal production. And those who are with Colin who think we've already peaked in 2014 in terms of global coal production. Sleep? Can't raise your hands in that case. So I think just slight win there for Colin in terms of the belief that we may have already reached peak production. Any thoughts or comments from the room to support one of your two gladiators here on this matter? Any thoughts? There's a question or a comment here.
Just a comment. I think right at the beginning when this was introduced, you said it was a very carefully framed question. And I've looked again at the question. and it says this House believes that the market will need an infrastructure-heavy greenfield thermal coal project again in future. It doesn't say next month, it doesn't say next year, it doesn't say the next 5 years. In future is a long time.
Yeah.
Now, I think people sitting on that side were asleep when they were choosing where to sit, or else they're at the wrong conference. Because in an extractive industry, it's inevitable that existing resources will be used up, and that at some stage in the future, unless coal demand disappears completely, which some would like, at some stage in the future you will need new resources, and almost inevitably some of that will have to be infrastructure heavy. Yeah. The second point is that it's not talking purely about internationally traded coal. Our very fine proposer was pointing out that this also includes within-country developments, whether within India or within China, and whether there is an internationally traded opportunity is one thing, but surely to discount the possibility of India or China investing in infrastructure to support a coal development is mad.
Yeah, very good points. I mean, and your fine proposer had to amend things slightly because he worked out he had to change all his numbers and he had to find some sort of growth from somewhere. The interesting point in that is, do you believe that the decline in extraction, I mean, resources naturally deplete, plus any brownfield expansion, is happening quicker than demand is falling away? This year it certainly isn't. Now, do you project that forward? It depends. We're in a down cycle, absolutely. I mean, and demand that we've seen for all commoditized goods over the past 18 months is well sub-trend. But in coal, it's probably worse.
Any more comments on global production growth? There's a gentleman behind.
Yeah.
In favor of our proposer and the gentleman there, I have a question to Colin. You gave the example of the Chinese replacement of their generation plants to inland areas where they have the resources. Don't you think that it is just an example of this infrastructure-heavy greenfield projects? And don't you think that this can be imitated in other parts of the particularly developing world? Or are you restricting your position only to the import coal aspect?
So a couple of things. Okay, what have we seen over the past 10 years? Infrastructure heavy, international greenfield projects. So I suppose that's where the debate started from. But what's China doing? It's not only moving its coal burn there, it's moving its heavy industry towards it. You're not having any infrastructure at all. Even in China, you're not building any more coal rail lines to ship that coal. This is the natural way economies develop. It's an efficient way to develop. China's developed in the wrong way. Most economies develop with the heavy industry at the resource base and then ship out goods from there, because logistically, that's the most efficient way of doing things. China's gone upside down. It's developed along the coast and is now saying, well, actually, most of our demand is domestic. Therefore, we will move our industry back there. And it helps, as I said, it helps with the development of these western provinces. It helps normalize GDP growth across the country. So for me, I don't classify them as infrastructure-heavy projects to the realms of this debate, because it's basically coal mining at source. So I'm talking about moving coal around for being infrastructure-heavy.
Any thoughts?
On that, yeah, and just back to the gentleman's question, I don't know if these still work, but I just wanted to show you, maybe not, pick up on, well, it's not working, but anyway.
You probably change your numbers. You try to change your numbers again, Joe.
No, it's not. They're fine. I wanted to pick up on life of mine, because life of mine is very important. So, Colin says this isn't happening this year. Well, yeah, obviously, I mean, this year is a very short period of time. But life of mine is a very important point. And you can see, kind of on the right-hand side, that decline in operating capacity is a combination of kind of high-cost mines exiting the market, but it's actually tied to life of mine too. In a lot of countries, you're having difficulty extending those life of mine in heavily kind of mature basins, and that builds into that kind of deficiency in capacity. So I would just say, life of mine is absolutely a kind of critical point there. I think, another point I wanted to pick up on is more to do with land risk in India. If I can move on to India. You mentioned, Colin, that which country has the most kind of risk around associated with land acquisition? That's India. Okay. India is looking at massive amounts of upside in domestic production from places that it can't mine on. So does that not build into the argument that there will be this gap between coal India not being able to achieve 1 billion tonnes or 900 million tonnes, opening its sector to private entrants who are not really that interested in it at the moment, versus demand down in the southeast and the northwest? From our perspective, it is. We think coal India will achieve some upside. We don't think it will get close to 900. So, due to the factor of land risk. But then that's before you even look at the coal quality. Because in India, the coal quality is up at the 35, we talk about washeries being low penetration in the Chinese market, and ash, 25, 30%, or 20 to 25%. In India, it's much worse. You're talking 35 to 40%. In fact, I think I saw a washery for sale over there for 1.5 million. I think more of them should be aimed at the Indian market, because at this rate, those coals aren't going to be, able to be transferred, because there's an ash penalty above 34, 35% down to the coast on freight. The new curves are going to be very ash heavy. So where does the washery come from? Where does the water requirement for that come from? It's a costly business. And then finally, on the Indian domestic supply side, is the e-auction prices. The third hasn't been particularly successful, but the first two were massively oversubscribed, which kind of infers that there's a high tariff associated with that, and the mining cost is going to be pretty high. When you can still get an eco coal delivered very competitively. So when you put those elements together, which is our thesis, you do get upside in domestic coal production, but not to the level at which it displaces Indian imports. I agree with you. Coal India's done what wonders this year, getting up to 8%, I think it is, year on year. But to get to that 900 level is not something that we anticipate will happen for those reasons.
Yep. I mean, to your point, we also build in small growth in Indian imports. That's what we have. We have them getting up towards, from kind of 160 up towards 180 by the end of the decade. But that is, I mean, in our view, where is the risk there? The risk is we're being too conservative in coal India production. Modi has put strategists in charge. He has got the easy results done. To your point, productivity is likely to gain across many of these emerging markets, because it's going to have to. Secondly, that's before we even build in these, the renewable targets I put up were, I mean, what is now being talked about. Now, it's not in any plan yet. But I'm trying to look forward here. That's what I'm saying. It's the, I mean, as you say, I have a slightly longer perspective maybe than you seem to give me credit for, Johnny. But if you think of what can disrupt in this market, we've seen it come through in Europe. When Germany can get 75% of its electricity from renewables in one day, the cost of renewable generation is coming down so hard and fast. And I can tell you, if we're seeing Indian companies come through every day interested in that sector, because of the pollution aspect, because of the land rights aspect, and it is moving, but it's changing the whole structure of power industries in emerging markets. That creates to us a big risk in terms of potential, what we're all building in at the moment for potential coal upside. If that doesn't happen, never mind decline rates, we're talking about shutting even more existing assets than we're having to do today.
Okay. Any thoughts or comments on, before we move on to renewables, any thoughts, questions, comments on India? Where's the audience on India in terms of optimism for increased production? No thoughts at all? Okay. Should we move on to renewables? Johnny, do you want to talk a little bit about the view on that?
Yeah, well, I just will kind of underline the point that Colin's made about renewable penetration. I mean, we have a high rate of penetration of renewables in each individual market. That's absolutely where we are at the moment. And that's built into our forecast on demand growth. I just think that kind of the numbers that Colin may be forecasting are way beyond what there is, or total electricity demand, take the Indian market for instance, is going to be way too low. When you look at, I guess you're effectively saying that perhaps our electricity forecasts are a bit too high per capita. When we looked at it, really, when you come down to it and you allow for distribution generation, in India it's still incredibly poor in 20 years' time. Electricity poor is what I mean. And so, there has to be some sort of upside. I think there's been a lot in the press. Okay, renewables in North America, absolutely. Renewables in Europe, absolutely. Storage, not really. I mean, Tesla are getting a lot of plugging in Another pun. And a lot of plugging in North America, but still haven't turned in a profit in 5-6 years. I think storage is a very long way off at the moment for commercial viability. So, you add those elements together, and I think you're still in a position where coal share is absolutely decreasing in all of the emerging markets. The rate of decrease is perhaps where the discrepancy is.
I just want to make a point. I mean, let's say we have viable greenfield projects out there, and you made the case that there are. Who finances them these days? The companies can't finance them. I mean, every coal company out there is suffering. And what we've seen in the past few weeks, I would say, and it's been a lot of a coal focus, the feedback coming through from credit markets back to commodity markets is extremely negative. We've been in a world where money's been cheap for 5 years. Everyone's been able to get refinancing if they've had to.
Who
That's
finances
gone now.
it? No, that's a good point, and I'm glad you asked me because I prepared an answer to that question, which is yes. Okay, I think a lot of the financing or coal divestment / financing falls into 3 rather big buckets at the moment. First of all, you've got the one that affects the market the most is commercial banks pulling out. Now, I think there's a little bit of an Anglo-centric view on that. Of course, you saw ANZ the other week, although that was very heavily defined. They wouldn't fund a new, effectively subcritical plant. It would have to be high efficiency, low energy. You've seen a lot of the banks pull out of the Galilee Basin, and you're effectively left with one-ish. So the commercial side, from a Western perspective, where you see on Western media, is very anti-coal. That's true. That doesn't mean that there's no funding available from the commercial sector. I think, even if you're looking at people like JBIC, JOGMEC, Corres, I haven't seen anything against them, and JBIC very heavily invested in coal projects and, looking acquisitively. So that's one area. Public financing. So when you go to the MDBs and the IFIs, yes, that's another area where I guess maybe they were the first to push forward, the coal divestment or coal financing loans, dividing that or pulling that away from coal projects. And that's true, but I think there's a really interesting geopolitical game at play now with the AIIB, the development of the Asian International Infrastructure Investment Bank. I think there is a bit of sphere of influence interest in the energy sector, in the mining sector, in the coal sector. I haven't seen anything, and we haven't heard anything from the development of the AIIB that there will be no future coal development. In fact, what we've seen is more of a flexing of muscle on the China Go West Pakistan infrastructure corridor development, which, by the way, I didn't include the Thar coal fields in Pakistan as a greenfield project, but that would be perhaps another one. So I think the MDB IFI financing, Western side, has gone. Don't think that accounts for everything in Asia. And so what you're left with, yes, is a bit of a strip away, but I think it's a little bit of an Anglo-centric viewpoint.
No, to pick you up on that, I mean, the people you mentioned, the Corres of the world, for example, who are their strategic shareholders? Their government. So and that's an economy, Korea, where they're pulling back on that thermal coal power plant that they had, even the one that was announced 2 or 3 years ago, saying actually, from a combination of political pressure from the West, admittedly,
right,
but also from the fact that the world's going to be awash with LNG by Wood Mackenzie's own forecasts in 4 or 5 years.
That's right.
Why do we need to build a coal-fired power plant again? So therefore, that's why I say that demand side, I think there's just a lot of risk to everyone's numbers that will continue to be pulling down demand side of the equation.
Mm. Yeah, I mean, that's true. The LNG oversupply story will be challenging on price into the future for, dollar per MMBTU price for gas, but still it's going to be hard to get competitive with coal, even when you account for coal import tariffs in South Korea, even when you account for burgeoning pilot, carbon plan in South Korea. Korea could be an area for that. Other countries may not necessarily be. I mean, you take a look at Korea, or the Korean coal market, very tender-based, very overarching, KEPCO and the 5 subsidiaries. I mean, that builds well into this idea of portfolio optimization of gas and coal. In Japan, less so, because you have very regional monopoly-based. You have long-term contracts, long-term annual contracts, and a corporate mentality that has been, we're not buying on a tender basis. So that idea of potential coal to gas switching, I think, is absolutely something that South Korea is, kind of in that domain, but possibly isolated to South Korea alone. In fact, if you're looking at China, this big coal to gas switching, that hasn't happened at all. It's been almost gas to LPG in the oil sector because oil prices have come down so much. So there's still a bit of a story to go on that, I would say.
Okay, I have another point then. We talking about infrastructure, needing more infrastructure being built. That would make the assumption that we're maxed out on infrastructure at the current time. Yet we've got coal terminals in Australia, which are going to go bust. We have underutilisation of much of the coal infrastructure, whether it be South Africa, whether it be Australia. So why can't we just see development of greenfield mines, but not necessarily the infrastructure side?
Okay, well, we'll have to pull up a map and just check our south missing link versus our north missing link and how that bids to the, or builds to the Abbott point or wherever the exit point is. No, that's a perfectly valid question. I mean, I think the utilisation or underutilisation in existing ports is one part of the infrastructure story, but there's still, if you were to imagine the Galilee going ahead, you would still need a rail associated with it. You can't just get to the port from today.
And coming back to financing it, what we're seeing, Wiggins Island Coal Terminal, the debt is worth nothing now. I mean, as soon as that happens, you see more banks pulling back from funding. You're going to get a virtuous cycle. Now, that's probably the most positive thing I can say about the coal market, is that we're going to bring things to a head here sooner rather than later.
Yeah.
Because at the moment, we're in this long grinding cycle where people still have belief that demand forecasts are too high. Production is being kept going by debt financing. US, of course, is probably the prime example of that, but it's an unsustainable situation. Economics will always work in the end. At the moment, we're not letting economics work in this market.
No, and I agree, it's not working in this market, and that's not our proposal. Our proposal is sometime in the future, and that doesn't happen as this overcapacity malaise really needs to get wound out of the system, and that's a good 4 or 5 years down the road from our perspective.
Okay, any more questions or comments from the audience on these topics?
That's Johnny's second-tier supporter.
Colin, can I just understand your point? You're saying that Chinese state lenders will support struggling coal miners for policy reasons, but that they won't support exports of high-value generating technology like boilers for policy reasons?
It's interesting. So what's China's problem at the moment? Disinflation. Where do commodity analysts get things wrong, or particularly wrong? We'd both be standing up here 3 or 4 years ago telling you that Chinese core inflation is 3 to 5%, therefore cost of goods in China are going to go up by that amount. PPI in coal last year in China was minus 12%. China's got too much capacity. Too much capacity means two things. Corporate margins are low, hence why Chinese coal industry is a corporate debt problem. But secondly, you need some revenue to service that debt, and you will export that. Now, China, what are we seeing from China? It's moved up that value chain. It is exporting some boilers now. It is exporting capital goods, machinery. You're going to see infrastructure. I mean, again, if there is going to be infrastructure built in commodity land, I don't think it's going to be coal, but China will probably build it, particularly into that Western corridor, which Johnny mentioned. So for me, this is not a long-term solution, but at the present time, what we are seeing is that that policy is going to look after the Chinese corporates, keep that Chinese coal production going at the expense of imports. And the seaborne market is taking a long time to appreciate this, but people keep asking me, when is that protectionism going to go away? And the Chinese corporate debt problem solved, and that's longer than Johnny would say my time horizon is.
Johnny, any thoughts on that?
No, not really.
Any other questions or comments from the audience? Okay, well, I'm going to put you gentlemen on the spot and ask you to get. Oh, sorry, did I miss one?
Yeah, Gemma?
Yeah, sorry. It's quite hard to see up here.
Thank you. It's not exactly about coal, but Colin, you have mentioned about the new concept of going more decentralized. And I don't know the answer to this question. This is why I'm asking. Because do you think it's really possible for the countries who hasn't built yet properly centralized system when distribution and transmission is a monopoly to jump directly to decentralized, or first they shall build it and then to decentralize what infrastructure is there?
It's an interesting question. It comes down to actually government policy in those individual economies. If they've got a private sector, what you're going to find? You're going to find big companies, big corporates will start generating their own electricity. So start almost at a very local corporate level first. To get it to, let's say, I call it a township-style model, that's probably a step too far in the short term, but certainly it's starting to be discussed. And as that technology comes through, now, I think it's being enhanced by the points Johnny said on industrial storage. That I agree, it's miles away. but people are starting to look towards that and say, well, do I need to build a big grid? Do I need to build big pylons across my country, or can I solve this in another way? That debate has accelerated very fast in the past 12 months. So for me, I think it's going to get a lot more press. It will happen in certain countries and not others. Countries with a rampant private sector, I mean, certainly some of the ASEAN countries, you may well see it. In other areas, it may prove a little harder. Thank you.
Thoughts, Johnny? No more thoughts?
Nothing on that.
Any final questions before I move on? So I want to just kind of put you both gentlemen on the spot. So assuming, Colin, for a second that you're wrong, a hard concept to understand, but and we kind of define the question. So I'm going to ask, three things, which is, let's assume that for a second that Johnny's right and we are going to have one of these projects. What is the key price threshold that will enable it to be financed and to be put in place? That's the first question. Second question is, what country would you bet on being the first place for one of these projects to be signed? And thirdly, what year are we talking? And again, this is personal views and a bit of fun, not holding you to this for the rest of the year. Johnny?
Yep.
Price, place, year.
Well, I think the prices are, as I said at the start, the prices don't have to get to such an aggressive level as they have in the past. I think you would need to see at least, well, it depends, because I know that's a bit of a cop-out, but there are different products per market. So in the Indonesian market, it's a lignite, whereas in Australia, it's more like a high-quality bituminous coal or mid-range quality bituminous coal. I think for those bituminous coals, you would probably need to see, well, our assumption on incentive pricing is now quite low. $65 to $70 is about viable for some of those projects. For the Indonesian projects, which are facing, with the Malays in kind of more on the eastern coast of Kalimantan, for central Kalimantan projects or South Sumatra projects, you would need more like $40, $45.
Country and date?
Well, Indonesia and Australia, those are the countries. I think from our perspective, we're looking a good, 10 years out from now, 9 to 10 years out from here. That's the kind of time range that we're seeing.
2024, 2025.
2025, yeah.
Colin, price,
Yes,
place, date.
to say commodity analysts it's hard to get around you being wrong. You haven't been around for the past few years. That's been pretty tough. In terms of price, we would look at $75 a tonne. It's been required for a thermal coal project, and again, the financing cost is going to be much higher than it has been in the past. In terms of where, I would tend to agree the safe jurisdictions of Australia and high quality bituminous coal, because the Japanese do want that. In terms of the time frame, well, we still have our 2025 nominal price below that long run incentive price that I talked about. So therefore, let's call it 2025 to 2030 timescale.
Excellent. Now, we're coming to the end, so maybe I could ask both of you to sum up your thoughts. I think we've had a wide-ranging debate, and so if you could sum up your thoughts for the audience, and we'll see if the proposers are still behind Johnny and the opposers behind Colin. So I'm afraid, Johnny, as ever, you get to go first again.
That's fine. Well, thanks for the opportunity to do this. It's been very enjoyable. I think we've heard quite a lot of views today, some excellent ones from my right honourable friend over here, Colin. And he's raised some very good points, and points that we always think about. I would say that, in proposal of this, the development of a greenfield heavy infrastructure coal project, the market doesn't look very good now, and that's a fact, and I think everyone knows that. But we're not talking about now. We're talking about an industry that's going through quite a lot of change, where there will be some exits from the market of high-cost producers. There will be still some volatility around domestic protectionism in China. But ultimately, when it comes to that, demand for coal is, whichever way you look at it, whether you look at it from a top-down, economic perspective, when you're looking at it on a plant-by-plant perspective, when you're looking at it from those plants themselves, what kind of coal they require, when you're looking at it from the point of view of how can you shift out this baseload nuclear that just doesn't look very viable at this point in time, without even thinking about social issues. And we haven't even mentioned large-scale hydro improvement too, which has been great up to this point, but there's still some assumption that you would need a large amount of gigawatt capacity from hydro contribution. When you take all those factors together, you allow for the renewable penetration. We still feel from an electricity perspective, from a cost perspective, from a quality of coal perspective, this market for demand for thermal coal hasn't peaked, either internationally or from the full domestic market combined. And allied to the fact that you have life of mine struggling and permitting, re-permitting of existing projects in some of the domestic markets, that will imply, from our perspective, that you definitely do need a heavy, infrastructure-heavy greenfield project again in the future.
Thank you, Johnny, and again, I say some fine points to yourself. I'm not saying coal's dead. I'm not even saying coal's dying slowly. I'm just saying that, for me, this market has gone through some changes, and it's over and above some of the things I'm seeing across other commodity markets. The change in policy from the Chinese government is a big shifting factor. It has reduced the size of the market quite substantially in terms of that seaborne trade. Secondly, I do feel that the disruption threat coming through from the local generation and distribution model will be something that will be built on in the future. On the whole, from a macroeconomic level, I do worry that demand forecasts out there will continue to be lowered over the coming years as a world we become more efficient, and also as the type of economy is wrong for industrial heavy growth at the present time. In terms of new projects, I just feel at the current time we're having such the process of removing capacity from the market will be so prolonged. By the time we take down demand forecasts, we just won't need that infrastructure-heavy project in there. I think there's also a lot of capacity to use the infrastructure we have in place better in the coming years to keep supplying the market.
Okay, fantastic. So I'm going to ask you to vote. If that's okay, gents. I'm going to put you on the spot. So all those in favour of the motion that this House believes that the market will need an infrastructure-heavy greenfield thermal coal project again in the future, in some time in the future. All those in favour of the motion, please raise your hands. How many have we got here?
Not even you, Howard.
You can raise 2 hands if you want to vote early, vote often. Okay, so, and all those opposing the motion.
Get your hand up, Johnny.
Okay, so I think that's a convincing victory for the proposer, Johnny. Congratulations on your fabulous victory.